All right, hello and welcome to Camel Finance. I'm your boy Camel, and I don't know about you, but it's getting quite boring, I think, in the markets at the moment. The markets have this way of wearing people out before they make a decision, and in fact, let me jump into a chart and I'll show you what I mean with Bitcoin straight away. So, I mean, Bitcoin has been sideways for a long time, right? And arguably, it's been sideways since all the way back here. So, what I mean by wearing people out is, if I just quickly draw this, we've obviously got this squeezing happening here, right? And at some point, this will break up or down, as I'm sure you're well aware. But the markets have this way of sort of getting the bulls excited, then getting the bears excited, getting the bulls excited, getting the bears excited, getting the bulls excited, including me yesterday. And now we're getting the bears excited again. So we're probably going to keep compressing for a couple more days. And the more compression we get, of course, the more violent the move. So whether it's up or down is anybody's guess. Nobody knows. A lot of people think they know, which is kind of annoying to see, to be honest. Nobody knows. But when we do finally break, the move is going to be explosive. So since we've got a cycle low back here, that kind of hints and suggests to me that we should be open to upside. It wouldn't take much to confirm a breakout above this blue downward sloping resistance line. But equally, nothing would surprise me at all here. It would not surprise me to see a breakdown, a failed cycle, and then we spend the rest of the 60-day cycle either sideways or trending down into around the early July portion. But for now, we're still squeezing. We're still kind of doing a whole heap of nothing, aren't we? The S&P 500 kind of half trending up, but also kind of trending sideways. So again, not really very exciting. The Nasdaq is getting a pullback, which makes perfect sense. The Dow is still kind of sideways. The only real changes here, I would say, is the VIX is now back above 19. So I would still think it's reasonable to expect that any spike here is short-lived and not very far above 21, 22, and then rolls over again. That's still my expectation, but perhaps we're about to see big invalidations across the board. That is to be determined. The UK has taken a bit of a nosedive here. So this is likely because we've had the inflation just be so much more severe than many places around the world here in the UK. We've still got the central bank hiking rates and telling us they're going to continue to hike and they don't care. So the markets are selling off on this news today. It goes to show, doesn't it, that I didn't take this early steep angle of attack because they are prone to failure. And that's exactly what we've got here by the looks of things. So being patient, waiting for the yellow setup, which never came, sort of kept me out of taking any losses on this one. So happy days there. The dollar is still into resistance. So if we can get a rollover here, then expect everything to improve very quickly. But if we do break out, then again, it's time to start entertaining more bearish scenarios. For now, though, still a whole heap of nothing, isn't it? Still not really got any level of decision here. And the last thing I wanted to point out was Apple. It's time to pay attention to Apple, as you can see, right into support. So a daily close below this upward sloping blue support line, and I will exit the trade and lock in this profit from this trade here. So all eyes on Apple today. We will see what happens. I definitely don't want to see a daily close below this upward sloping blue support line. And so as you can see, a whole heap of nothing is really going on. So things can change and they can change quickly, and maybe they're about to change, but as it stands, they haven't changed yet. I wanted to point out a couple of things. We are currently facing dismal conditions, but these are the very conditions that lead to a new roaring bull market. They always have, they always will. Bull markets are born out of recessions, and all bear markets lead to new bull markets. Your job is to just wait patiently and remain disciplined. Your job is to ignore the pundits and the conventional wisdom. Why? Because conventional wisdom produces conventional returns. Your job is to muster up the courage to be exceptional. Admittedly, being exceptional is not easy. That's what makes it so rewarding and rare. Your job is to survive the bear market, not defeat it, not short it, not be the next Michael Burry, might I add. Your job is to survive that little voice in the back of your head that wants you to take the easy way out and throw in the towel and blame and make excuses and call manipulation, etc., etc. But if you quit when the going gets tough, you will fall prey to your emotions and the good opinion of others, most of whom have never attained massive success in the stock market. You'll be nothing more than another trader with bad beat stories that didn't exploit the one thing you had complete control of, which is your choice. You will fail to prepare and you will not be in position, ready and able for the next great opportunity simply because you failed to believe in yourself. So without a doubt, as always, a great opportunity will emerge in the stock market, and without a doubt, those who are best prepared for it will make a fortune. The proverbial radio will keep on playing, and the only question is, what channel will you be tuned into? So better times are coming, better times are going to be here. Perhaps they're already here, we're just waiting to see confirmation. Or perhaps even we've got to make some more lows across the board. Maybe we've got to just have that old adage of sell in May and go away, and maybe that's going to turn out to be true. But so far, things don't look so bad, although they are kind of boring. I'd just like to add here, the markets have this way of wearing people out. So don't allow the market to wear you out. If you take some stops because you're chasing trades or whatever, just try to take your time, put your stops in place, but don't overtrade, don't revenge trade. You know, stay on top of your game, stay sharp, understand where we are in this point in time. We are at the point where they are trying to wear people out before we make a big move. So don't get worn out, stay patient, stay relaxed, stay focused. We have got this. Even at current prices, Bitcoin has a higher market cap than MasterCard. So let that sink in. One of the biggest differences between this Bitcoin bear market and the last one was that in 2019, the hash rate didn't reach new all-time highs until Bitcoin had 3x'd off the lows. Compare this to today, where the hash rate is already 2x'd its prior May 2021 high, whilst Bitcoin itself is only up 75% off the lows. So this time really is different. This time we really do have a lot more capital invested in the network. This time there are a lot more people that are a lot more incentivized to ensure that this network does not get attacked, does not be damaged, as we continue to work towards accumulating as much Bitcoin as possible before the supply starts to truly dwindle after the next halving. With June just a week or so away, everything to me looks set up for a very, very positive June. Hong Kong has an awful lot of ultra high net worth individuals, and they're just about to let retail buy Bitcoin from June the 1st. So are we about to see massive inflows into the Bitcoin space? Is that what this price action needs to finally start to get some momentum again? It may seem like Bitcoin and altcoins have been pretty volatile this year, but the 2-week Bollinger Band width says otherwise. Crypto Bollinger volatility remains at the depths not seen since 2015, right before a massive 2016 to 2017 bull run. Compression always precedes parabolic expansion. So let's zoom in and have a look at this. You can see here the blue is the Bollinger Bands, right? Which, if you don't know, is just 2 standard deviations above and below a 20-period moving average, which is the yellow line in the middle. As you get reduced volatility, these bands compress, as shown here. And as I said before, compression precedes expansion. So when we get this pinching of the bands and the blue lines come very close to each other, what follows after is a massive explosion. Again, you can see here, we are really, really wide with the bands, and then they slowly start to pinch until they get very close together, and that precedes a massive pressurized explosive move. Fast forward to today, and you can see we have intense pressurization. This is a very, very tight pinching that we're undergoing. The volatility is actually very, very low. Like I said, it's all about trying to wear people out of the market, trying to get people to give up, trying to get people to throw in the towel, so to speak, in terms of revenge trading, upping position sizing, starting to add to leverage, only to be stopped and chopped a bunch of times before then we get a violent move to the up or downside. Given where we are in the 4-year cycle, given where we are in the daily cycle, I still think it's reasonable to expect further upside. But that, of course, is to be determined. Over in Japan, their stock market has just hit the highest level since 1989. So Japan seems to be undergoing a melt up. So do many Asian markets, and so do many European markets. Again, doesn't really speak to bear market rally so much as opportunity for the US equities to catch up. But something that looks very positive, we have seen as inflation comes down, we have seen the markets respond very, very positively to this. And for the first time, I've been waiting to show this for a couple of days. I've been following this metric every day. And for the first time now, we finally have a 2 handle for the US inflation. So whilst we have a government reported rate of just under 5%, as you can see here, the actual trueflation metric is showing 2.98%. We currently sit around 3 weeks away from seeing the US CPI report. And of course, if it can come in on a 3 point something, if it can come in even on the low 4s, then expect markets to rally, expect risk to come on strongly as we still remain in this Goldilocks zone. The other key thing to point out is regardless of the short-term price action, let me zoom out a bit here. Regardless of any short-term price action, remember we can come all the way down to this red upward sloping support line and still maintain bullish structure, but get into the middle of June, see a very, very low CPI print, and of course it will give the Fed the credibility to start to talk more seriously about a pause in rate hikes, and of course then we should see risk come on very strongly. The key thing to point out here is, like I said, regardless of pullbacks as well, we're not that far away from taking out this high. Now, if we really zoom out and have a good look at this market, if we come down here and form a low, then continuously put in higher highs and higher lows before breaking through here and trending up, at what point are the bears going to be able to continue to short? You're not going to be short up here, are you? Look, where my mouse is now, look left. You're not going to be short in this neighborhood. You're not going to be short in this neighborhood. I mean, there will be people that short the whole way up, right? But bears are going to have to capitulate, and we're not that far away from forcing them to. If I look at the NASDAQ, okay, the NASDAQ is already clearing these highs. Now, again, it can come all the way back down to this red upward sloping support line and still maintain bullish structure. But if we do something like this in the short term, and then we get that low CPI print that should likely catalyze a big, strong push off of here, again, how many more times are you going to short? Look where this lines up with on the left-hand side. Are you going to short from here? Are you going to short from here? Probably not, right? People that have been short the entire time are going to have to capitulate, and that is, I believe, going to drive the final blow-off portion of this rally. Again, everything is one day at a time. Everything is to be determined. But so far, I don't think things look too bad. I do think I'm starting to get quite bored, personally. I don't know about you guys. I am starting to get worn out a little bit. But the important thing to do is to remind yourself that you're not like retail. You're not like everyone else. And you're not going to allow the market to truly wear you out. So stay patient. Stay focused. I'm your boy Camel. I've got plenty of sunshine here, so I'm going to go and enjoy that today. And in the meantime, know your levels, especially for Apple. If you're in Apple like I am, then keep an eye on that, because a daily close below that line, and we will have to exit that trade and lock in the profit. But that's not the end of the world. Profit locked in is profit locked in, right? Anyway, until next time, take care from me. All the best. Cheers. Bye.